welcome to my channel. Thank you so much for watching today. Please like, comment, and subscribe so I know you enjoy my content. And please also watch my previous videos if you haven't already. Thank you. So let's get into today's video. This is officially the last week in Canada to file your 2019 income taxes without late penalties or fees. And I am actually an accountant. I work as an accountant and I am becoming a chartered professional accountant. So I thought the best thing I could do for you guys, since it is the last week to file your 2019 income taxes, is to give you my top 5 tips for filing your 2019 tax returns. And these tips are super easy to follow, and they will help you not only streamline your taxes to avoid any audits, but they will help you increase your return or decrease your taxes payable as well. So let's get into it. Number 1, when filing your tax return, make sure you choose the right accountant. Please, and I say this over and over again, do not think you can do your tax return yourself, or you can give it to a friend, or you can give it to any party that is uncertified. You need to give your taxes to a chartered professional accountant to complete, because you may think you're saving a couple $100 in fees, but you're actually just losing potentially thousands of dollars in your refund, or you're creating thousands of dollars worth of audit and refiling costs for yourself. So please, please, please choose the right accountant and choose a chartered professional accountant. I hate to see when people go to these unqualified, unexperienced people and they have issues with their taxes, or they miss out on refunds just so they can save a couple $100. It makes absolutely no sense to me. Also, make sure that your accountant is non-arm's length. When I say this, I mean don't let it be somebody very close to you, because you're gonna have to tell your accountant every single financial detail possible in your life. And you need to be comfortable doing that, because your accountant cannot help you sufficiently if he doesn't have all the information. So you need to choose someone who you are comfortable with disclosing information to. And I know for a lot of us, if it's somebody very personal to us, we might not be comfortable disclosing our financial information to them. But if it's somebody who is a third party, it is a lot easier for us to sit down with them and disclose that financial information. And also, I recommend when getting an accountant, get somebody who is professional and conservative. You may think bending the tax rules is something cool to do, or something to do that you're gonna get away with and you're gonna get good money. It's not. Pick an accountant that follows the rules to a T, because your taxes aren't to be avoided. Your taxes are to be processed properly so you don't have any issues in the future, especially if you're a young business owner. Because if you start filing your taxes with all sorts of all sorts of errors and mistakes, that's going to come back and haunt you when you're in the future, when you do become a successful entrepreneur, because they're going to come take a look at your books and they can go back 7 years. So I promise you that tip or trick so-and-so told you is not worth it. Get a conservative accountant that knows what they're doing and does everything by the book. Number 2, make sure you accurately file all of your expenses. So both the CRA and the IRS have computer systems where they run all the tax returns through, and they look for numbers that don't make sense, numbers that don't add up in regards to the average population, numbers that are too round, numbers that are, instead of it being like $486.27, it's $500, round numbers. They look for these because they know that these elements are elements of error. They're elements of fraud. So when you're filing your expenses, don't approximate. Don't approximate and say, yeah, this was $12,000, this was $15,000. No, you need to make sure it's accurate to the penny, because they will absolutely flag those round numbers, and they will absolutely flag high numbers that just don't make sense in regards to the rest of the tax returns. So when you're filing your expenses, make sure you file them to the penny, and also that you have documentation for them. So whether it's food, you need to have your receipts, and the CRA put in a new rule that you need to have the contact person in the back of the receipt. So if you had dinner with someone and you're trying to expense it as a business dinner, what you need to do is after that, have the person you are having dinner with write their name and telephone number in the back of the receipt, because if you get audited, the CRA wants to contact them and ask them questions about, was this really a business dinner? Or if you're expensing your rent, make sure you have your tenant's agreement with the specified rent ready to go. Any type of rental income expenses, you need to have backup documentations, agreements, contracts, receipts for all the expenses you want to deduct from your net income, and they need to be accurate, because if they come around and audit you, and they might, if they see inaccurate numbers or really round numbers, you need to have all that documentation good to go. You cannot basically risk not having those documents, because not only are they going to ask for all the money back, they are going to give you heavy penalty fees and interest fees, and you want to avoid that. It's not worth taking the risk. Number 3, expense your vehicle costs. So whether you're an employee or you're self-employed, your vehicle is used to produce your income. Whether that may be going to work every day, going to visit clients, whatever it may be, your vehicle is getting you to where you need to go to make income. So expense it, because I know how expensive vehicles are. So in order to do this, the best thing to do is keep a car log, which means keep a log of the kilometers you drove all year round, keep a log of your insurance cost, keep a log of your parking cost, keep a log of your fuel costs, keep a log of your lease cost, have all the documentation for the original purchase price or the lease contract. Keep these documents so you can expense your vehicle, because the vehicle expenses could be up to $20,000 a year. That's a huge deduction against your total net income for your taxes payable. So you don't want to lose out on vehicle costs. Expense those if they are appropriate and if you have the documentation for it, because we do use our vehicles to get to work where we make our income, right? So it's part of our expenses in producing our taxable income. We can't fly to work, right? Tip number 4, contribute to your RRSP accounts. Now this is for Canadians. I don't know if Americans have a equivalent or not, but definitely contribute to your RRSP account, because first of all, you should be contributing to it anyways to be financially responsible, because it is for a retirement purposes. It's for retirement purposes. So you need to be doing this anyways. But it's actually great tax benefit as well. You just need to look at your deduction limit. Whatever your limit is, try to maximize it. And any amount of your income that you do put into this RRSP account is taken away from your total income. So basically, it's tax-free money straight into the RRSP account, and it lowers your net income taxes payable as well. So contribute to your RRSP. It's not only just financially responsible, but it helps with your taxes as well. And actually, a lot of employers will match a percentage of your RRSP contribution. So let's say you send in 5% of your income, your employer might match 2% of that. So you're getting money savings and then extra money from your employer, and you're being financially responsible by putting money away. So it is completely a win-win situation. Make sure that you contribute to your RRSP account, and it doesn't have to be lump sum. I personally contribute to my RRSP accounts monthly through my financial advisor. A set portion each month, it goes right out of my account right away. That's the way I like to do it, because I don't want to like have to pay a huge lump sum at the end of everything. But you could do that as well. If you have been putting income into your savings account, at the end of the year you can be like, okay, let me move 10,000 from this account to my RRSP account, deduct it from my taxes, good to go. Either way, you need to contribute to your RRSP account. Number 5, make sure you deduct or you basically file any allowable losses, whether that's allowable business loss or capital loss. So this is extremely, extremely beneficial, especially when you're starting your business, because usually when people start their business, what happens is that they lose money for the first few years, but eventually if they keep going, it picks up, it picks up, it picks up. In those first few years, you want to file your taxes, even if you're like, I have no money, I'm going into negatives, how can I afford to pay an accountant like $200? Do it, I'm telling you, because all those losses that you're gonna report in the first few years of business, you can then deduct in your future business years where you're making a profit. So in those years, you don't get heavy tax payables, you get way lower. You might even net out to 0. Make sure you account for all your losses. Don't think, okay, I'm not making anything anyways, why should I file my taxes? Oh my God, worst mistake possible. File your taxes when you're losing money. You need those losses for when you actually make profits, especially with capital accounts. Personally, I know I have some investment accounts and they have gone down because of the pandemic, and that's okay, but I'm gonna file those in my tax return for this year. Because I want to use those capital losses in the coming years when I do have gains, so I pay less taxes on them. So make sure you report your capital losses and your business losses, because these losses really come in handy in the future when you're making money. When you're making that $200,000 from your business, when you made that $200,000 from your investment and you're like, oh my God, I gotta give like half of this away as for taxes, you're gonna shoot yourself in the foot if you don't have any allowable losses to use against the gains. So make sure, I'm gonna repeat myself 100 times, make sure you file your allowable business losses and capital losses. So that's all for today, folks. I'm gonna try to get this video out to you guys tomorrow, which is Wednesday. Here in Vancouver, and good luck to everybody filing their tax return. I hope everything is done effectively and correctly, and I hope these help. Thank you so much for watching today. Please leave a comment below to let me know if you enjoyed this content, and give this video a huge thumbs up. Thank you guys so much. Bye.